This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Top oil exporter Saudi Arabia raised the price for the flagship Arab light crude it sells to Asia in September for the first time in 3 months, while cutting prices to the other regions. The official selling price for Arab light crude to Asia rose by 20 cents to $2 a barrel above the Oman-Dubai average in September, Saudi Aramco said in a statement on Sunday. The price was a 2-month high, but the hike was less than the market had expected. The producer also raised prices for other light grades sold to Asia but kept Arab medium and Arab heavy crude prices unchanged.
Oil futures extended losses in a volatile session on Monday as fears of a recession in top oil consumer the United States offset supply worries stemming from mounting tensions in the Middle East, the world's largest oil-producing region. Share markets also tumbled across Asia as U.S. recession worries sent investors rushing from risk assets while wagering that rapid-fire rate cuts will be needed to rescue growth. Brent crude futures dropped 78 cents, or 1%, to $76.03 a barrel by 0652 GMT, while U.S. West Texas Intermediate crude futures were at $72.65 a barrel, down 87 cents, or 1.2%.
Moving on to the top news in the energy sector.
Japan's gasoline imports are expected to stay elevated through August after rising 20% in June as outages at its refineries are reducing output during peak summer demand season, traders and analysts said. Import demand from Japan will further tighten supplies in Asia and support refiners' gasoline margins, which have rebounded to 2-month highs earlier in July. Japan's gasoline imports in June rose to 476,630 kilolitres, up 20.4% from the previous month. Data from the Ministry of Economy, Trade and Industry showed on Wednesday.
Brent oil may fall towards $74.73 per barrel, as suggested by a projection analysis. The contract has briefly pierced below support at $76.51, the 200% projection level of a downtrend from $85.81. It is highly likely to extend loss into $73.64 to $74.73 range. Wave pattern suggests an incomplete 5-wave cycle from $81.80. The most optimistic scenario to bulls could be a moderate consolidation in the range of $76.51 to $77.61. A break above $77.14 could open the way towards $77.61 to $78.29 range. On the daily chart, oil has fallen below a wedge, which looks like a bearish pattern. Next, we have the top news in metal markets. Prices of copper and other metals in London kicked off the week higher on Monday, following data showing growth of China's service activity, while prospect for deeper interest rate cuts by the United States also weighed on sentiment. 3-month copper on the London Metal Exchange climbed 1.2% to $9,165.50 per metric ton by 0419 GMT, while the most traded September copper contract on the Shanghai Futures Exchange slid 0.6% to 73,530 yuan, $10,292.12 a ton. Growth in China's services activity accelerated in July, helped by new orders, although momentum in overseas demand eased to its slowest pace in 11 months, a private sector survey showed.
Gold prices drifted higher on Monday, aided by worries that the United States could be headed for a recession and rising bets that the Federal Reserve will likely need to start cutting interest rates aggressively. Spot gold rose 0.14% to $2,446.83 per ounce, as of 0519 GMT, after falling 1% earlier in the session. U.S. gold futures rose 0.8% to $2,488.50. Gold is picking up safe haven flows, with financial markets in a risk-averse mindset to start the week, said Tim Waterer, chief market analyst at KCM Trade.
We will now look at the top news in the agricultural sector.
Palm oil inventories in Malaysia, the the world's second biggest producer, is expected to drop in July for the first time after 3 consecutive months of rise, a Reuters survey showed on Monday. Malaysia's palm oil stocks were seen at 1.80 million metric tons, down 1.17% from June end, according to the median estimate of 11 traders, planters and analysts polled by Reuters. Elevated beginning stocks, soaring production and marginally higher imports is set to make supply faster than demand, thus fueling higher stocks as at end of July, said Sathya Varka, co-founder of Singapore-based Palm Oil Analytics.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.